Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 10th of March. Starting off with Angle, where we're just relieved that after bouncing a couple of times off that support line there from May last year and the falling RSI support line there from August, shares in Angle actually went up and they actually headed towards resistance on the way down in the upper 80s. In fact, I think peaked at 90 earlier today, or 89.5. Current view is that at least while we're above the neckline resistance there at 79, we could see further progress for the shares, maybe towards 90 to 100, which is would be an attempt at a meeting with the 50-day moving average falling just above the £1 level at the moment. A bit of a buzz around the next stock, Angus Energy. Investors looking for 1 and 1 to equal 3, etc., etc. But what's interesting here is a chart where we had that tree shake down to the 0.6 level, which was at the end of January. Left a gap there, and what we want to see now really is an end-of-day close above the top of that gap at 0.95, which hopefully we'll get relatively soon. Above that, then looking for 1.3, retesting January resistance. Bullish, I suppose, while we're above the recent swing low around 0.73, but ideally we get that 0.95 plus close and the shares move higher. Stock which I haven't covered very much of late, but you can see that the shares did deliver with the bear trap gap reversal, gap down there in November and then closing the gap, and haven't really looked back since. We had another gap to the upside unfilled, so that was a double gap signal along with the island reversal, which was completed by that gap down we had in September. So charting working on Argos, and here we have the shares attempting to hit the initial target at the top of that broadening triangle from this time last year, as high as 4.2 or 4.3p over the next week or so. If you're a fan of the shares and looking for greater glories, then that could come in the form of a move towards that resistance line there at 6.5 from back in November. That trend channel from that month heading towards 6.5, maybe by the end of next month, something like that. So looking quite encouraging there on Argos. On to a stock which is worth a look at the moment, not normally in our type of sphere because it's a bit bigger than the micro caps we normally look at, but we've gapped up here for Boohoo through that resistance line there from November. That should be significant, and it suggests that at least while we're above that resistance line in the floor of the gap at 80 pence, we could see a move back towards post-February resistance at £1.10 by, basically over the next 4 to 6 weeks, or hopefully even sooner. Audio Boom, another bounce off the 50-day moving average for the shares. So we had one of those back in January. Done that so far this month as well. Just a bit of resistance on the way down around 1920, so an end of day close above that. Then we could be back in the game for a move within this rising trend channel from October with an implied £26 a share target, and the upside certainly valid while there's no end of day close back below the 50-day line currently at 17.20. Moving on to Corsol, which I think somebody was asking about, or asking on Twitter about. Let's say here we've got a rising trend channel. Shares have gapped up so far this month, which is impressive given the current conditions. Good support here in the 1 to 1.2 pence area, and above that, and especially the longer we stay above the rising 50-day moving average, which is a plus point, we could head up to 2.8 or even 3 pence at the top of the 1-year trend channel on Corsol. Moving along to a requested stock, and what a journey this has been over the recent past. Here we've got Chill Brands, and what you can see here is that we've had what hopefully, if you're a bull, will be an exhaustion gap to the downside, so breaking that old support area around 9 pence. Bounced off this support line there, falling one from November around 4 pence, and above that, well, the shares have got a chance of filling the gap up to 7.8 pence. Maybe over the next few weeks, something like that. But obviously this is a falling knife and not for the squeamish. Covering a few stocks today which have been on the back foot of late, just to see where they are on the sort of the charting front. First one is Deep Verge, which Basically, it's gone into deeply oversold territory, RSI around 16, which is the most oversold it's been for quite some time. I suppose the last time it was this oversold was back in March 2020, so you can gauge how on the back foot the stock is. You should see a bit of a reaction maybe towards the upper teens, support in the 17-18 pence area back in February. So it would be logical that while there's no fresh low, we could have a little bit of a rebound for Deep Verge back into that area. Moving along to another stock which has been pounded a bit over the recent past, Mode Global, if I can get the right stock there. Here you can see again another stock which has gone into deeply oversold territory, so the RSI around 20 there for Mode Global at the moment. Haven't been that oversold since, the end of 2020 when the RSI was down below 10. It just gives the impression that the shares could head back up towards February resistance and the 50-day moving average around 15 pence, especially if we get a bit of a bounce off this RSI support line, which obviously worked a bit with angle earlier in this video. On to Open Orphan, where we have had a bit of a bounce here now off a falling support line, finally came through around the 11-12 pence area, also bouncing off that falling RSI support line as well. That gives the impression that we could head back up towards 17 pence, which was the support both in December and January, and also is the area of the 50-day moving average just above it. So let's see how we go there. Another stock which bounced in yesterday's rally was Powerhouse Energy, and here we've got a situation where it looks as though we're sort of, we found a double bottom there with the old August support around 2.7 pence. Bit of resistance now around 3.5, so an end of day close around 3.5 now required to give the shares a chance of heading towards the February resistance around 4 pence, maybe by the end of this month, something like that. We have broken that RSI resistance line, so that does give us a bit of encouragement that the shares could stage a bit of a rebound. Moving on to Quantum Blockchain, which has been one of my favorites over the recent past. I don't think the shares have particularly reflected that, but we have had a bear trap gap reversal over the last week. So we gapped down at the beginning of the month and then closed above the gap yesterday. The old support there at 1.9 pence, above that one would expect the shares to not only break that line of resistance there from October, but also retest the initial 2022 resistance around 3 pence, perhaps by the end of this month. Finishing off with Tirupati, which also gives the impression it's had a little bit of a bear trap there. The old December low there around 64 pence. So end of day close or a weekly close above that level could give us a little rally back up towards the 50-day moving average at 76 pence over the next few weeks. Good bullish divergence there with the lower low but higher RSI there for the shares versus where we were back in November. So a little bit of a respite there for Tirupati shares. That's it from me today. More updates tomorrow.